Welcome to the HVAC Financial Freedom Podcast, a show to help you create more revenue, profit, and freedom in your life. Now your host, John Victoria.
Live. Hello, everyone, and welcome to the HVAC Financial Freedom Podcast. My name is John Victoria, your host, and we are in for a treat today. So we are speaking with the profit and wealth guru herself, Miss Ruth King, and we got a lot of fun things to talk about for today. And so if you don't know about her, she is a serial entrepreneur and has a passion for helping small business owners, over 37 years of experience. And she's also the founder of Business Ventures Corporation, where she coaches and trains contractors in the plumbing and HVACR industry to achieve their goals and to build profitable businesses. She's also the creator of HVACchannel.tv, an online platform offering resources and training for contractors looking to grow their business. And in addition to her professional accomplishments, she's an avid supporter of adult literacy and runs marathon races, having run the Boston Marathon in 2004 and 2005. So we're going to bring her on. Welcome to the show, Ruth.
Thanks, John. I appreciate it.
Yeah, super excited. So yeah, let's kick things off. I think the thing that folks who might not be familiar with you are curious about is, first, how did you get involved in the plumbing and HVACR industry, right? There's so many fields to get into. How did you end up in this one?
By accident, like everything else happens in life. I was in grad school and I had a couple of jobs and a job I really hated. Once I got out of college, and I was down in Atlanta, and I went back and got my MBA and met a woman who was working for Service America, and they needed some help. So I found a niche. And then it expanded out of HVAC, plumbing, electrical, pool and spa, basically home services. That's where it is now.
That's awesome. And I guess another thing I'm curious about too is how did you get the title, the Profit and Wealth Guru? Like, how did that, so you started your journey and like, how did that end up to be your title, like the Profit and Wealth Guru?
I will put our numbers against anybody's numbers in the industry. We do really well. That's number one. And then when I was in grad school, I have degrees in chemical engineering, so that's my background. And when I was in grad school, I found out I was really, really, really good at numbers and explaining numbers and helping contractors and others, through numbers. And so if you look at the history, I mean, one of the coolest things over the years has been a contractor and his partner who started with about $750,000 in revenue, grew him to about $10 million, 16 years, sold the company for $9 million in cash.
Oh my gosh.
So, I mean, that's been repeated many times now. So it's, if you want to be really profitable, which is what this is all about today,
Yes.
right?
Yes.
We'll give everybody some of the tips that they can do and some easy to implement things that when they click off the podcast, not now, make sure you listen to the whole thing and then start implementing some of them, and it'll help your profitability.
That's amazing. I mean, that's what it's all about too, right? Start off 750K business, came away with nine million. I mean, a lot of us start our businesses to make a difference in our families' lives and to build that generational wealth. And it's like, it's amazing. Just that feeling of you helping others and really seeing that contractor build that life for themselves.
That was fun.
And in less than 20 years too, right? It's not like this is like a forever goal. Like this is pretty short. It's not that long if you think about it.
No, it's not. And one of the two partners is living between up north and Florida, and he's considering starting his rock band again. I hope he does. He had that when he was a kid.
There you go. Just, pursuing your dreams and just rocking out.
Mm-hmm.
That's awesome. And so I guess, your current venture right now, it's Business Ventures Corporation. And how did that evolve since its inception? So was it helping, contractors with the same things, or how has it changed since then?
It started in 1981. In January of 1981, I started Business Ventures, and it's grown since then. And it's the whole goal is to help contractors, help small businesses, business owners who want to grow. I mean, there are lifestyle businesses out there who could care less. That's not my market. My market is companies who are at a specific, at a level, but they're either frustrated with that level, they want to grow to the next level, and they have a reason for wanting out. So one of the first questions I ask almost everybody I work with is, what's the end game? All right. We all leave our businesses. It's much better to leave our businesses the way we want to leave them rather than it, kind of leaving us. I was working with a 46-year-old contractor, probably 20 years ago now, and he had a heart attack and died. Who expects a 46-year-old to die? He left his business and his wife sold it off in a fire sale. I mean, that's not how you want to go out. You'd much rather go out, on your terms rather than on somebody's going, surprise, you're done.
Yeah, because we're all going to leave our business at some point, right?
We are.
100%. I don't even need to check this out. 100% certainty. We're all going to leave our business at one point.
Yeah. So it's better to plan the exit from your business and do what you want to do. And I look at businesses as a tool. It's a tool for what? It's a tool for passing it down to the next generation. It's a tool for selling it so that you have the cash to do what you want to do. A lot of people travel, a lot of people train, a lot of people teach, give back. I mean, there's a lot of people who now work in, different areas of the world, helping different people, a lot of church things that go on from that perspective. So, I mean, one of my colleagues who's done very, very well is in Guatemala right now in the jungle, helping them build their, living facilities. And I don't know another way to describe it. But really, giving back to those who are less fortunate for all intents and purposes.
It's amazing. And I love this pause and maybe even dive deeper into this because, it sounds like clarity of vision. It sounds like that's absolutely key, like clear for what you want out of life, but also, how you want to exit your business and how it can be a tool to really build that life that you want. And at least some things that I've noticed with some folks or some people that are absolutely clear, like what they want to do with their life and where they want to go. Let's say we're speaking to a contractor right now and you were trying to get them to think about, like, really clarify their business. Like, what are some other things? Like, you're going to ask, hey, what do you want to do with your business? Like, I don't know.
Yeah.
How can we help coach them to clarify their business and what they might want?
I usually tell them a story of some of the contractors who have sold who are miserable because they lived, eat, breathe their business and they don't do anything else. So if you decide to sell your business and you're doing nothing else and you can't go to the office or the shop in the morning, you are miserable, you're tired, you can go pretty quickly after that. Yeah. So I suggest, they may not know what they want, especially if they're younger, in their 50s probably. But I say, okay, go find something else to do now that's outside of the business. And so you can start building what you want to do. And they may try 16 different things till they find the thing that they like. But at least they're doing things that are not, coming to the office, working 12 hours a day and going home and doing nothing else. That doesn't help you at all. So that's really where it starts. And a lot of times they don't know where they want to do, but they start thinking about it. What would you like to do? What do you do when you're off time? If you could spend a weekend somewhere, where would it be? What would you be doing? And just, little things like that. I'm not asking them to go, okay, I'm not going to be in business in 5 years, but start thinking about it.
Yeah. And that's a given, right? Like we all want to be free. We all would we be doing the bit like what we're doing now if we didn't need money? If so, great. That's amazing. But many times we get into a business, we're just good at it. If you're familiar with the concept of ikigai, it's like what you can be paid to do, what the world needs, what you're good at. And what's the last one? It's like what the world needs, what you're good at, and what you'd be paid for. I forget. There's another one. There's
it for free. I think it is.
Yes, it might be that.
Yeah.
And so there's like those concentric circles, and the thing that you really love to do, that might not necessarily be what you are going to be paid for, but you still got to put food on the table, find that freedom. And so how do we just eliminate that needing to make money part? And it's by building and selling a
business.
Venture.
Yeah, absolutely. Build and sell a business. And when we're in the day-to-day trenches, a lot of times it's like, you don't even think about where you want to be in 10 years or 5 years or 15 years or 20 years. You're just so focused on where it is.
Yes.
But occasionally you just need to step back and get away from the business and get people in there who can, if you're gone for 2 days, they can handle it. There are some business owners who call in every day and, make sure everything's there, and they run the business from wherever they are. That's not the idea here. The idea is to be able to say bye, even if it's a long weekend. Let people, you'd be surprised at how well they do with your money, so to speak.
Yeah, and I guess that's the second step. So it's like, okay, first we have this clarity of the vision of where we want to go. Next, it's okay, I want to grow this enterprise so that it can run without me. What would you say are some of the challenges, whether that's external or even internal, that stop someone from really achieving that freedom of needing to always be in the field or in their business?
Stop micromanaging. Period. If you micromanage, you can't grow. You have to learn to trust people. Will they make mistakes? Obviously, as long as they're not, kill the business type mistakes, they learn from them. And you've also got to have enough cash in the bank. And there's lots of rules and suggestions with respect to how much cash you need, depending upon your risk tolerance. And just, decide that if you want to truly grow it, you cannot micromanage it. There will come a point in time, depending upon the type of business that you have, it'll be somewhere between $1 million and $2 million in revenue, that you'll implode if you try to grow any further. You just can't. You cannot handle everything. It just does not happen. So you learn to hire people. Will you make mistakes? Absolutely. But if you don't start, you don't try, guess what? You'll never get there. I started working with a contractor who was about $4 million in what I call one of the levels of no man's land. It took us a couple of years to find the right management team. But once we did, they have taken that company to $30 million in revenue.
Wow.
Without him. Well, not without him, but you know what I'm saying? So that he right now can do anything he wants. They have the team to run the business. So that's cool.
Wow. Yeah, so it wasn't even him. It's like it was just his role as CEO to find the right team to grow the business.
That's right. And manage the situation. Okay, they all have KPIs, they all have budgets, they all know how to read a P&L. He reads the balance sheet. I mean, I taught him to read a balance sheet really, really, really well. We know how to figure out how much, you can afford to spend on this, this, and this. It's one of Ruth's rules. But he took the lessons to heart. And when we started working together, he said, I'm a very good student. And I've heard that before, but he really was a really good student.
Oh, man. And so I guess the question in my mind and other folks' minds, so how did he find that team? Like, was it like, how did he attract those people? It sounds like these are, if they grew him from 4 or 5 million to 30 million, these people are A players. These people are rock stars. They could go anywhere that they want. Why?
Nah.
How did he attract? And then.
He pays them really well. And the bonuses based on what their departments do are really good.
Okay.
So yeah, he's got golden handcuffs. I promise you.
That's awesome. Is it like, so it's like performance based? Like, let's say you hit these certain metrics or.
Well, it's certain profitability. It's not revenue as much as it is profit. And you get paid a piece of the profit of your department.
Love that. And if they're A players, they want to grow that, grow their take home pay. It's like, I want to grow this business as best as I can, because that means I can take care of my family too.
Yeah. And they can do what they want.
Love that.
Which is the key, right?
Yeah. So in a way, it's like everyone wins. It's like the owner wins, but also the management team wins because they themselves.
And everybody else in the company also gets bonused. So the really cool part about doing what we do is everything's based on net profit per hour, i.e. for every billable hour, how much actually drops to the bottom line in net profit. So when you start looking at it that way, everybody who sticks around and stays on board, and there are people who don't want to do that and they go by, that's fine. We'll find others. From the person who answers the phone to the person who's managing it, other than the person who owns it, everybody is focused on the bottom line, and everybody understands what it takes to make a profit, and what happens when they screw up, and what happens when they don't take care of a customer, and what happens when the company does really, really, really well, and what happens when the company has some issues. I mean, a lot of times there's good years and bad years. COVID sort of, as it ended up, turned out to be pretty decent for our industries, for home service. But in the beginning, we didn't know. I mean, think about it. Before PPP loans were there, and when everything was shutting down, nobody knew squat. And it was like, okay, I have enough money in the bank to be able to handle whatever comes, and that's what you need, because you never ever know. I hope we never have another pandemic, but who knows? We don't know.
Yeah. You never know. You never know what's coming down the pipeline. Yeah, so that's absolutely crazy. And so, but I love this. So it's like this. It's really this complete system. It's like top down. It's based off of net profit. Everyone's aligned towards the same goal. So whether I'm dispatching, whether I'm in the field, or whether I'm on the management team, we all are aligned, and there are I guess each department is managing their own subset of KPIs, but all of it really just funnels to the direct KPI of, hey, what's our take home? What's our net profit at the end of the day?
Yeah. And everybody understands that the customer writes their paycheck. Everybody understands that. And if you screw up and you don't take care of a customer, you lose a paycheck, and nobody wants to lose a paycheck. And, every time when I start working with a new client, I usually ask the field people, who writes your paychecks? And I'd say 90% of the time, they say the owner or the bookkeeper or something like that. No, the person who writes your paychecks are the customers. Without the customers generating revenue for you, you have no paychecks. We're done. Your owner might sign them, but the customers actually write them.
Yeah, he's just a pass through as a result of the service. And, let's say someone doesn't have this, like, what is, like, when you're working with someone, like, how does this process look like? Say they don't have this entire system set up, and maybe their books aren't clean. Like, how does someone get to, it sounds like it's just an easy point of clarity. Like, everyone is clear on what needs to get done. They got the KPIs, but getting to that place, if you're not already there, I imagine it's a challenge.
Sometimes painful, sometimes very painful. If you don't have inventory on your balance sheet, that is painful. You have to do it simply because if anything you buy goes to cost of goods sold, your profits are less than they should be. And you're kidding yourself because you have inventory. I've walked in everybody's shops and I've looked at everybody's trucks and everything along those lines. I will give commercial a little pass, but residential, I give no passes. Even commercial, you got some refrigerant, a few parts, nothing major, because you have to buy pretty much what's needed for that particular situation, because it's not cookie cutter. But you've got to have inventory. If the books are a mess, we clean up the big rocks, then we find the stones, then we find the little rocks, and then we find the pebbles, and finally where it needs to be. Sometimes it takes a year to get it all clean. So it's hard sometimes, but you have to want to do it. And if you don't want to do it, don't waste your time, don't waste my time, don't waste everybody's time, and just do what you want to do. As I say, I have very long or very short relationships with my clients. My oldest client was 1987 when we started, and he sold his business, and I helped him sell it in December of 2021. So that was I still talk to them. But it was time to go. They had things that they wanted to do, and valued it and sold it, which is what needed to happen. And they're happy as can be. They're traveling all over the place. They're doing what they want to do, and they're having a good life.
It's amazing, and a testament to you as well. I mean, that's 20, 30 years of working together.
Yeah.
That's a great level of trust. You've seen them in the ups and downs, maybe even seen a few kids and grandkids come along the way.
Oh, yeah. And then there's others where the kids are actually now running the business. Dad is, we're getting dad out, and we're getting the kids, so to speak, to take over, and they're doing the KPIs, and they're doing the financials, and they're doing the things that dad used to do.
Wow.
Dad's kind of here, but he's not, if that makes sense. Yeah. So he's kind of oversight. However, the day-to-day decisions are made by the kids, which is fine.
Beautiful thing. And I mean, I'm a big believer that business is one of the greatest personal development tools. And so just, a father or a mother handing down the business and then having their kid go through it and learn all the things, it's it's such a beautiful, beautiful thing.
And the hardest thing parents have to do is if there's one kid who's not productive and thinks the business is an entitlement, get that kid out. That's hard.
Yeah.
That's really hard. Or making the decision between two kids who's going to run the business and who's not. That's another difficult decision, but it has to get done. Otherwise the business won't survive. You cannot have two 50-50 equal partners. Does not work.
Yeah.
Somebody has to be in control.
Yeah, especially that's a toxic thing. And
because employees won't put up with it, they'll leave. Then you'll get your good managers leaving, and that's not the idea here.
Mm-hmm. Wow. Oh, the challenges and the joys of a family business. Awesome. Well, let's do a quick pivot. I know you love finances and getting the books down, and you have this program you mentioned we talked about before. It's a financially fit business. And can you tell me more about that and like what goes into becoming a financially fit business?
Yeah, well, number one, you have to want a big one. Okay. Number two, you have to get your financial statements every month on time. If you get January statements in April, it doesn't do you any good. The minor issues have become major crises. So good, bad, or indifferent, you need your financial statements every month. And the program, the software program itself, all you do is you enter your financial data, click a button, and it will give you ratios and graphs and where you are and where the trends are and things to look for if the trends are not going the right way. So to be financially fit, you've got to have a net profit per hour that you really and truly want. You've got to have the growing maintenance program. I don't care what home service business you're in, you can have a maintenance program. Sorry, don't buy it. And you've got to have building the wealth piece of it, which is the cash, and what I call the off the balance sheet, which is your customer base and maintenance base. Both are really, really important. And then you have to have enough cash in the bank to survive another pandemic. So that's financially fit. And you make great business decisions based on the data. And that's really what the key is. The data is accurate. You may not like the answer, but you can take care of it if you don't like the answer.
Yes. And a prerequisite is like, you need those numbers, and those numbers need to be accurate. I know one thing we talked about before was, I don't know if you'd want to get into it, but like looking through the books, like, oh, these numbers don't look right. So the prerequisite, like, it needs to be right first. It has to be legitimate numbers.
All right.
And can you talk more about that?
I'll give you 5 ways that the numbers are wrong. Number 1, negative cash on your balance sheet. You have to have at least a penny in the bank. You can't have negative cash on your balance sheet. You can't have negative receivables on your balance sheet, which is number 2. And a lot of software packages don't allow you to do deposits, or you have to set up deposits when you get deposits on jobs. And they just immediately put it to receivables. But since you haven't billed, you have a negative receivable. And that's what happens. You need deposits on your balance sheet. So those would be 2. Number 3 would be no inventory on your balance sheet for companies who have inventories. And there's some who don't legitimately. Their suppliers manage all their entire inventory and everything else like that. So the only inventory is generally on their trucks, which is fine. But there's still a little. And then that would be number 3. Number 4 would be that a balance sheet doesn't balance, i.e. assets are not equal to liabilities and net worth. Number 5 would be that there's no rent or there's double rent. There could be negative payroll taxes payable, which, I see negative garnishments. Okay, look, I promise you, whatever county you are sending a check to on behalf of an employee, they don't owe you money. I promise you that doesn't go on. Then you have to make sure that the balance that's on your aged receivables list matches the balance on your balance sheet, and the balance on the aged payable list matches the balance on the balance sheet. So you have to do both of those 2 things, and you have to look at the net profit off your P&L and make sure it balances your year-to-date net income. All right, that's really fast, and I know that's really fast, but those would be the places that I would start. And then we have to make sure that we don't have apples and oranges. All right. We do not want financial statement fruit salad. And you find financial statement fruit salad if your gross margins, i.e. gross profit divided by revenue, is not constant. So what happens is you have revenue in 1 month, and let's call that the apples month. And expenses, the labor materials, or part of the labor, part of the materials are in another month. And so when you job cost, you have the apple month, which is your revenue month, and you have the orange month or the peach month in Georgia, not matching. And when you put them together, you have fruit salad. You want revenues matching expenses in every single month. And that's the best way to know that you don't have financial statement fruit salad. It's also the way to find somebody who's stealing from you too, if the margins are well known.
And I guess maybe it's just a quick question. So like cash versus accrual, are you saying like you should be doing like accrual type accounting? Okay.
Yeah. You can pay your taxes on a cash basis, but you will almost always be profitable on an accrual basis, on a cash basis, because cash revenue, a sale is considered a sale when you actually get the money in the door, and an expense is considered an expense when you write the check. So are you going to bounce checks knowingly? No. I was sitting in a meeting one day and they said, yeah, but some of our guys do. And I'm like, that's not cool. Yeah. That's not cool. So from that perspective, always should be accrual. That's the only way, because you have receivables and payables and inventory. On a cash basis, there are no receivables and there are no payables. So if you want to file your taxes on a cash basis, that's between you and your CPA, but all of your work, day-to-day operational work, needs to be on accrual.
On accrual. Okay. Got it.
And in QuickBooks, all you got to do is one little thing to say accrual. It's not hard.
Yep. Not hard at all.
One button. That's it.
I love that. That's perfect. Because that can really make play a different role, how you're categorizing it. And then another follow-up question. So you mentioned, it sounded like earlier you were talking about emergency savings in terms of having enough cash savings for a pandemic. Like, what's your rule of thumb? Are you thinking like 6 months, 3 months, 12 months, or because you're balancing like wanting to invest in the business with having your moat to protect you? Like, what would your rule of thumb be?
All right. So it doesn't have to be a pandemic. I had a contractor who had $800,000 in the bank, and they said, everybody's going, that's too much, that's too much, that's too much. And he got sued. He eventually won, took 3 years and $700,000. Wow. All right. He didn't have the 800,000. What would happen? He'd be stressed out beyond belief because he had to run the business. At least he had the cash. He was stressed out enough, but at least he had the cash to be able to pay for really, really good legal advice. And he eventually prevailed. So it's not necessarily pandemic. It could be, something like that. It could be a major supplier. Or I had a situation where a contractor was really profitable, about a $10 million contractor. 3 of his GCs went and filed bankruptcy the same week, leaving him in the bag for $1 million in receivables. Took him out too. All right. So it's not only, pandemic, it's stuff like that. Yep. So my rule of thumb is this. All right. Take your highest payroll month, including payroll taxes, everybody's payroll, and take your highest overhead month, which are usually the same, and then multiply somewhere between 3 and 6. Okay. All right. Now, if you are totally risk averse, if you want 12, be my guest. But generally, you can deal with 3 if you have savings for maintenance or something along those lines. It just makes it a little bit easier, but always try to have somewhere between 3 and 6 months of operating expenses liquid of some way, shape, or form. It doesn't have to be in a bank savings account, because what are we getting? Like 0.1% these days? Forget it. But there are some things that are still, there are some CDs now that are around 5. So those are the types of things that you can do now. And they're still fairly liquid. If you had to get your money out, you could. You just lose the interest on the CD. So you might, get some. I'm not a financial advisor, so go find one. All right. Yeah. But 0.1% of interest is just not my thing.
No. Yeah. You're losing money. I mean, you can't keep up with inflation at that point.
Yeah, no kidding.
You're losing money. Okay, so 3 to 6 months, and then yeah, you're kind of just taking the highest, the highest point for, kind of like payroll, and then it was like more materials based. So it's like you have the highest possible average, and then multiplying that times the 3 to 6.
Yep.
Okay. And then what do you do with the excess? Are you like, is that just like growth money, or how
Yeah,
would
you can have more than that. It's, the most I've ever, when I always tell contractors to put their maintenance agreement and money away and just put it in a savings account, especially if you don't need to use it for operations. The fastest I've ever seen somebody put money away is $1.7 million in 5 years. All right. Now, not all of that is in a bank account right now for obvious reasons.
Yeah.
But, that was, think about, the 1.7 being your nest egg at some point in time when somebody buys the business. That 1.7, can become yours. You negotiate that I take all the cash, or you leave only a certain amount of cash in there. So,
wow.
It's fun.
Yeah. So nest egg plus what they pay you for the proceeds of the business.
Yeah.
Wow. Amazing. Oh my gosh, that's awesome. Awesome. And so I guess moving on. So you do a lot of different business trainings, but what's the scope of all of them that you offer? Helping contractors improve their skills.
Normally, most of the ones I do now are financially oriented. I still do a dispatcher class, and that's all online now. And then I'll do managers trainings for service managers and field managers, and people who actually have a bottom line responsibility, as well as owners. I do a class called Building Profit and Wealth, and it's a day on P&Ls and a day on balance sheets. And it's 2 days of intensive training on financials. And then I have a bookkeeping, because I got mad one summer. I won't use the terminology I actually used, but it was like I was getting asked the same questions all the time. And I said, that's it. I'm writing a course. So I have 18 modules. It takes a contractor's bookkeeping from, all right, technician goes to Mrs. Jones and the invoice is this, all the way through taking it through a P&L and a balance sheet. And it's in English. It's not in accounting babble. So, there's homework associated with it. There's videos, there's a manual. I mean, you can watch, you can do it. It's either or, and there's homework with each one. And then I've written a lot of books. The newest one is 101 Dumb Financial Mistakes Business Owners Make, which will come out in September.
Oh, awesome. Yeah, let us know when that comes out so we can promote it.
I will do that. Yeah. And then The Courage to be Profitable, which is the Bible in terms of understanding P&Ls and balance sheets and net profit per hour. And then let's see what else. The Profit or Wealth, The Ugly Truth About Cash. And that one's fun. That one's actually my least, I don't want to say favorite, but I want to say the people have bought that book the least out of all of them, because nobody believes it will happen to them until it does. Prevention doesn't work really well. You got to get diabetes in order for you to start doing something about it. It's
unfortunately
crazy.
Yeah.
It's absolutely crazy. It's funny because I had an owner sit in Profit or Wealth, the 2-day class, and to go through the class, and did well in the class. And the second day of that class, I talk about, here are 10 things to put in place to make sure your bookkeepers don't steal, or whomever is stealing, whatever else it is, keep the honest people honest, so to speak. And so I get an email from him about, I'd say 8 months later, 9 months later. And he goes, I think there's something going on with my bookkeeper. Will you help me? And I'm like, of course. And we got on the phone and he goes, I sat through your class thinking this would never, ever happen to me. And it did.
Oh, wow.
So if you think it's not going to happen to you, you've got blinders on.
Yep.
If you don't put the procedures in place, it is likely to happen to you, unfortunately. Pay attention. It's your cash. And the easiest way to pay attention is to look at your bank statements online every day. How long does that take? 5 minutes? Maybe.
Yeah, maybe 5 minutes. Yep.
Yeah. I mean, you can see what checks went, what ACHs went. If something looks strange on your, on your bank statement or bank account or something along those lines. One of my contractors I worked with had his bookkeeper doing it, and he noticed like a 2-cent deposit and the, whatever the other, less than $1 deposit. He said, oh, the owner's starting, doing a new account. He just didn't tell me. Bank called the next day and said, did you authorize 2 $25,000 withdrawals out of your account? No. And so they shut the account down. That was just finding out whether the account was real.
Oh my gosh. There's a verification amount, 2 cents. Wow.
So look at it. You just never know what's there. And it may not be your people who's stealing. I had an auto mechanic, not the mechanic himself, but somebody who worked with him, change a check from like $40 some odd to $440 some odd. They stole the 400. Went down to the bank and they got their money back because they proved that it was there. And I assume the bank went after them. But can you imagine the conversation to the owner that,
yeah,
somebody's stealing, and they're not stealing from you, they're stealing from me, and this is what happened. It's like, ooh, that's embarrassing.
Yeah. Oof.
We can talk stories all day if you want.
Yeah. Well, folks need to protect themselves, right? It's like like you said, no one expects it to happen to you, but you got to protect yourself, to put the optimism, the rosy colored goggles on and think nothing ever that'll happen. Man, that's
5 minutes a day looks at your bank accounts.
Yeah.
It's like brushing your teeth. Takes less time to look at this than brush your teeth.
Oh man, I love that. So yeah, that's a takeaway for everyone. Daily habit, just check your bank statements check your bank accounts and just look at them every single day. Just
all of them.
Mm-hmm.
Your savings account, your operating accounts, all of them. There was I say if nuns can steal, anybody can steal. So about 3 years ago, 3 nuns stole money from a diocese school to go to Las Vegas and gamble.
Oh my God.
It hit the national news.
Oh my God.
And how they did it, there were 2 operating accounts, one of which everybody had forgotten about, that same name, basically. Most of the checks went into the one that they used, and every once in a while a check would go into this one. And they didn't find out about it until the administration changed and they did an audit. And I thought the Catholic Church had buried it because it got hushed pretty quick.
Yeah.
And a couple months ago, they were indicted.
Okay, good.
So if nuns can steal, I'm sorry. Anybody can steal. I mean, they're supposed to be above reproach, right?
Yeah, it sounds like it's supposed to be that's not real. It's like a start to a joke,
It's not. It's legit. You can Google it and find out now.
That's crazy. Yeah. Oh my gosh. Well, hope the time they had was worth it. Now they're going away. Gosh, that's crazy. Well, here's the question for you. So you have a number of books, courses, 1-2 day programs. If someone wanted to go the fastest, point A to point B, hey, I'm at $1 million, I want to go to 5. Like, what would you recommend that they do to get the fastest to get from 1 to 5 working with you? Like, what books or how should they work with you? Like, what would that look like?
All right. First of all, to go from 1 to 5 million, that's an additional $4 million. You need $400,000 in cash. Where's that coming from? That's the first question. 1 to 1.5 is not a big deal. $50,000 in cash. It's easier than $400,000 in cash. So we have to know where the cash is coming from for growth, for starters. And that's there. I have an operations manual that's residential one, commercial one, plumbing one, you name it. And it's 570 pages and a thumb drive that I couldn't fit everything in the manual on how to do this. It's not, it's tedious because you got to find the right people. To go to 5 million, you have to find the management team. It's not an option. And sometimes that's really hard to do. And generally the people who got you to the 5 million or got you to like 2 won't take you to 5. And that's really hard because people unfortunately reach their level of incompetence. It's Peter Principle. And they're really, really good when you were 2, but they're really, really bad when you're 5. And firing your oldest employee is incredibly hard. It's really, really, really hard. So you have to realize in order for the business to grow, you have to have a really good reason why. Number one, put the plan in place, and I can help you put the plan in place. It's not a problem. But you got to be able to implement it and do it. And that's a lot of times where I come in. It's like monthly financials I get. We have monthly phone calls. Are you where your goals that you wanted to be at? How's this going? How's this going? And so we do that. And then at the end of that year, we look at it and we say, okay, where do we want to be next year? This is what the overall goal is. And I'll give you an example. I just had a conversation with one of my clients today. In 4 months, they're $500,000 over budget in revenue and profit, both. And I said to them, I said, okay, do we want to up the budget? Or, I'm willing to leave the budget the same way it is, but I can't have you slough around, and I don't have to worry about it. I'm making budget for the rest of the year. And they go, no, we'll continue. We want to do X, Y, and Z, and I'm not going to tell you what X, Y, and Z are, but that's really good reasons to keep going that much over budget. So, sometimes there are reasons for it, and that's okay. You just have to recognize that those reasons are there, and you have to realize that, okay, we want to continue doing that for these reasons.
Got it. And just one clarifying question. So you said growing to the ones with five, you said 500,000. So that's the 10%. You're saying the growth budget is 10% of where you want to go, right? And
no, the growth budget is 10% of where you are now to where you want to go. So they're $1 million now. They want to grow to 5. They need $400,000, which is an additional $4 million, and 10% of the $4 million is $400,000.
Okay,
right,
got it.
They're already the $1 million.
Yep, got it. So where you want to go minus where you're at, that delta, 10% of that's your growth budget that you need. If you don't have that, then okay, we gotta have some conversation.
How to get it.
Yeah, how are we gonna get that? Do we need financing?
Generally, you can do it through maintenance agreements and maintenance agreement revenue and keeping that in your savings account. Remember that one contractor who put away $1.7 million in 5 years? Yep. I mean, if he wanted to grow, another 400, yeah.
You got it.
You got it,
Oh, that's awesome. Okay, that makes a lot of sense. Makes a lot of sense. Okay, cool. And I guess that's that some owners will have to split between, do I want to keep all this profit or do I want to reinvest it back in my business? It's like it can be a tough conversation with themselves, right? Are you advocating your
no. If you want to piss me off, excuse me for saying that way, take money out of your savings account and buy a boat.
Oh my God. That's not part of the plan. The boat wasn't part of the
plan. I've had that happen a few times.
Oh my gosh.
We did well. We have lots of money in our savings account. Yeah.
Oh my gosh. Awesome. Well, any other stories you wanted to share of like contractors who you've grown and have like really built these amazing lives that you could share with everyone?
Well, I'd rather share another horror story.
Sure. I love those.
And this is something that everybody has to pay attention to, because in the field, especially with residential home services, everything's COD, right? So you have the swipers in the field and you get paid and it goes supposedly in your bank account, right? So this tech, I have no idea why he thought we wouldn't catch it, but sometimes they don't think really well. Got a square. Put it in the company name and his bank account. And all you need is your federal ID number. And on everybody's W-2 at the end of the year is the company's state and federal ID numbers. So he did it. And the owner, we look at the weekly cash flow report every week, and there's the receivables and the payables balance behind it. And he saw some residential customers who supposedly had balances, which didn't make sense. So he called them all on the phone and he said, want to make sure everything's going, the service call was well and their systems are doing well. And, oh yeah, everything's great. Did you happen to pay the bill? Now, he didn't say, why didn't you pay the bill? He said, did you happen to pay the technician? You go, oh yeah, we paid by credit card. Would you mind sending me a copy of the receipt? No problem. So he gets all these receipts in. Company name, wrong checking account.
Oh, wow.
The guy went to jail on 7 federal counts, including, theft of identity. Yeah, the list was long. I don't even remember what it is right now. For $4,000. Why in the world? I mean, is it worth it? He probably thought we wouldn't catch it. But if you put the procedures in place, you'll be able to see these kind of things. And just be careful when you take payments in the field that you make sure that the payments go into your checking account and not somebody else's, or the checks go into your checking accounts rather than someone else's. There's been times that checks have gone to the ATMs and deposited checks, and the banks just did it, even though that said it went to the company.
Wow.
They put them in their own personal account. So just be careful. So if once you're careful, and let's end on a very positive note, okay? The thing is, if you know your numbers, you'll end up learning to love your numbers. And this sounds really crazy, but a lot of my clients can't wait to get their numbers now to see. It's a scorecard. How are we doing on our scorecard? And once you've got that and you've built the business and you know why you're building the business and you've got the freedom, you have groups, you have a great management team running the business for you. They're paid well. They're taken care of really, really well. You have the freedom to do what you want to do. And nobody can tell you what that is. You have to decide what you really and truly want to do, but you can do it. And your business is a tool to get there.
I love that. That's the dream. And
yep.
It's just, you didn't mention a lot of things, right? You said it in like 30 seconds. And so it's like not crazy. I mean, there's going to be work that everyone has to do, but if you're passionate, you really want it done, work with people that can help you get there. And it's just a matter of time. Really, it's a matter of time and doing the right things.
Yep. And getting through the tough times. We all have them.
Awesome. And so I guess before we hop off, how can folks get into contact with you? Like, what would be a great way? Would it be through the website, email?
Email is rking, RKING for Ruth King, at ontherribbon.com, ONTHERIBBON.com. And before you ask where that came from, because it doesn't say HVAC, or anything else like that, many, many years ago, Ribbon was a platform where we had all of our different websites, and they all fed that platform. So the Ribbon was what we used to tie all the websites together. So that's where they came from, and I never used another one per se. So that's good. Office number is 770-729-8000. If you want to call me, I'm not here a lot, but I do return my phone calls because I'm on the road working with contractors a lot. So cool. But thank you. I appreciate it.
And to find your courses, like how will they find it? The website, and can they go on Amazon to buy the books? Or?
Amazon, you can buy the books. All the books are on Amazon. The courses are all on HVACchannel.tv, and there's courses there that are not HVAC related. There's plumbing ones and stuff like that. I just didn't bother putting together another website. They're all there. So all the books are there, all the courses are there, all the classes are there, all the manuals are there. There's a soft skills library. There's lots of things on there for contractors.
That's awesome. Yeah, definitely. And we'll also put in the show notes. So for anyone you didn't catch it, we'll put in the show notes. Make sure you get it. But yeah, I guess with that, Ruth, thank you so much. Like, this is fun. Like, there's the good, but also it's like, what are some of the shadowy things you got to watch out for, right? You don't think it's going to happen to you, but that's exactly the person going to happen to. What Murphy's Law. So yeah, everyone make sure to check out HVACchannel.tv, explore the different resources, reach out to Ruth. Absolutely amazing. Some of the stories, the contractors that you've helped go, really build generational wealth in their family. And that's really what it's all about, and really making a difference in your loved ones' lives. So with that, thank you everyone to tune in. I appreciate you. We'll catch you in the next episode. And hope you enjoyed. Take care, everyone.